to stick with the markets now and get back to that jobs report with Michelle Girard, Managing Director and Chief U.S. Economist at NatWest Markets. Hi, Michelle. So what do you make of today's jobs report? What does it tell you about the state of the recovery in the labor market?
Well, it really confirms that we're continuing to improve, but we're improving at a slower rate. Every month we're seeing that the job gains are diminishing. And of course, we look ahead, and with restrictions being put back in place, over the last month, the expectation is December will look even worse. I think we're sort of in our heads penciling an outright decline again in the month of December for employment. And the one headwind, and I think this is something that we'll keep in mind for all of the economic data that we see is remember, these numbers get seasonally adjusted, which means that they try to take into account the fact that you normally see a pickup in activity late in the year. Of course, this year we're not seeing that. We're not seeing extra hiring for the holidays. We're not seeing people head out and have holiday dinners and parties. And so there will be less of a pickup. And the seasonals that are trying to push the data down to offset that and give us a clearer reading will end up making things look worse. That happened in today's report a bit as well, with the weakness really coming in retail hiring and other service sector hiring, which just you didn't see the pickup like you normally would in November.
Michelle, as we dig into this report, beyond the headline numbers, we look at the participation rate, the share of Americans working or looking for work. It sits at a 50-year low. What does that tell you about the recovery in the job market?
Again, it underscores the fact that the underlying health, even in the face of what of a solid job gain, is still somewhat concerning, and we are still not on strong footing. The unemployment rate declined, for example, but it declined because, exactly as you said, the labor force participation rate went down. People left the labor force, and statistically, that contributes to a higher or a fall, in the unemployment rate. But it is not necessarily a sign of a healthy, of actually a strengthening labor market. And when we look at the people who are getting hired, it's temporary workers, it's individuals who are on temporary layoff. That were furloughed and are being called back to work. So we are seeing job gains, but it's not structural improvement. It's really just a calling back of workers. So again, when you look into the details, the report still gives you reason to have pause. And of course, even on the overall numbers, we're only a little over half we've only recouped a little over half of the job saw as a result of the virus beginning in February.
Right. I mean, you bring up a great point. We've regained about 12 million of the 22 million jobs that we lost during this pandemic. And now, some economists are saying we might not get back to pre-pandemic levels in the labor market until 2024. If that's the case, Michelle, what kind of drag is that on GDP over the next few years?
We're not quite as pessimistic as that. We do have the unemployment rate getting down back to full employment levels by the end of 2022. And I guess the one thing, I acknowledge that the gap that's been created, the hole that's been created by COVID, is going to take well through next year to close. But I also don't want to be overly pessimistic, because let's face it, we have gotten good news over the last month with the vaccines. And we do expect that the economy will pick up momentum in the second half of the year as the vaccines get widely distributed. So there is, I think, reason to be optimistic if we're willing to look over what's going to be a difficult couple of months.
When you look at the possibility for a stimulus package, say we get one before Christmas, as an economist looking at the big picture here, what must that stimulus package contain to have a meaningful impact on the overall economy?
Well, a lot of it is just continuing to provide support for consumers. It's about providing a bridge. We talked about the fact that looking ahead, 6 months from now, things will be better. But there are still going to be difficult times between now and when the vaccine is more widely distributed. And so increasing unemployment benefits and helping consumers to weather this near-term period where we may, as they said, once again see employees furloughed as a result of the second wave, continuing to provide support for small businesses that are going to struggle for the next couple of months as consumers are staying home and very wary to travel out. We do need stimulus to help get us to that better ground in the second half of next year. So I do think it's very important that we see action from Congress and honestly from the Fed as well, with the meeting next week, perhaps providing more signals of support to help the economy through this difficult winter.
Before we let you go, you bring up the Fed. What's one thing they can do to throw at this economy? I sort of thought they had done all they could at the moment. What would you want to see them do?
Well, there is a lot of speculation that with the purchases that they're making of government securities, that they will buy a larger share of longer term debt, of longer term bonds, which will help to keep longer term interest rates from rising. With the vaccine news and the stimulus news, of course, 10-year rates that mortgages are tied to are moving up. And if the Fed is buying more in the 10-year sector, that will help to keep those yields down and help to provide support for the economy. So that's one thing that many people are looking for the Fed to do next week, to announce a shift in the composition of the purchases that they're making in the Treasury market.
And that would only help the housing market, one of the few bright spots here in this recovering economy. Michelle Girard, Managing Director and Chief U.S. Economist at NatWest Markets. Enjoy your weekend.
Thanks, Alexis. Talk soon.